Hi and welcome to Swissquote's Daily Market Talk. We are January 6, 2026, and Venezuela dominates global headlines. The idea that American oil majors could eventually step in has been enough to lift energy stocks yesterday, even if the timeline remains long and politically messy. Meanwhile, the ripple effects are being felt well beyond oil and beyond Americas. Defense stocks, for example, are also catching a bit these days as geopolitical risk creeps back into pricing, as Denmark, for example, dislikes Greenland threats. Duh, while rare earth metals are also quietly stealing the spotlight, as China, a financial backer of Venezuela's energy sector and the biggest rare earth metal exporter to the world, is unlikely to watch developments passively, it is said, and markets and investors know it. As a result, some sectors outside technology for once enjoy decent inflows, but technology is also coming with good news. So we will talk about all that and more, but before we do, and as always, please keep in mind that opinions are my own and this is not financial advice. Crude oil that couldn't convince to bring in the bulls in Asia on Venezuelan news yesterday morning ended up rallying as soon as Europe stepped in yesterday morning. Then the US session pushed the barrel of US crude above the $58.50 per barrel level. Crude is again under selling pressure this morning in Asia, just above the $58 per barrel mark. But as we discussed in detail yesterday at yesterday's Market Talk episode, the hesitation from investors from the oil bulls comes from the fact that Venezuelan vast oil fields suffer from years of underinvestment and aging technology that prevents the country from pumping this oil and exporting it at scale. Despite sitting on the world's largest oil reserves, the country exports less than 1% of the global oil supply, as we said yesterday. But Trump has a plan. He wants to send American oil giants in Venezuela to spend billions of US dollars, fix the badly broken infrastructure, and start making money for the country and for themselves, of course. An idea that more than pleased oil stock investors yesterday, sending the S&P 500's energy stocks up by 2.72%. So if you were not sufficiently convinced that softer Federal Reserve rates, rising inflation risk due to the global trade frictions, and the rotation trade would be good for oil stocks, well, you must have been convinced by now with the Venezuelan cherry on top. And of course, there are worries that the US operations wouldn't stop at Venezuela. Trump is also looking at Denmark's Greenland for its strategic positioning and access to critical metals, and that doesn't really please NATO members. And there is no doubt going into Greenland and taking it will be dramatic for the world order. It would simply mean the end of NATO and the beginning of a new and dark era for global geopolitics. And even as an extremely unlikely scenario, we can no longer completely rule it out today. So that explains why the European defense stocks kicked off the week on a strong footage. The stocks aerospace and defense ETF jumped more than 4% on Monday's trading session, just at a time we thought that gains in these defense stocks would soar after last year's nearly 100% rally. Unfortunately, the outlook for global defense stocks suddenly improved since last weekend. And another winner of the Venezuela incident is rare earth metals. That's because China is watching Maduro's capture by the US with great concern. They have been giving loans to Venezuela to rebuild and update the country's oil infrastructure and refineries for years in exchange of cheap access to their oil. So if the US takes hold of Venezuelan oil, well, China will pretty much lose its privileged access to cheap Venezuelan oil. So that's the problem, and the expectation is that China could retaliate. And one of the most effective Chinese retaliations, as we witnessed last year, is restricting its rare earth metal exports to the United States, which pushed Van Eck's rare earth metals ETF by 3.82% up yesterday to the highest level since last October. Now, good news is that Venezuela also has rare earth metals that the United States could exploit to decrease its dependency on Chinese rare earth metals. But the problem is the US can't turn its back to China overnight, as China is by far the major exporter of these rare earth metals to the world. They account for more than 2/3 of the world production. And remember why these rare earth metals are so important to the US? Because they are used in technology. And no one wants to be stuck with avoidable supply constraints in the middle of a global technology war. So voila, if we summarize, oil and defense stocks, rare earth metals, and Bitcoin also have been biggest gainers of Venezuela news. Bitcoin for the reasons that we talked in detail at yesterday's episode again. So the UK's energy and mining heavy FTSE 100 index traded past the 10,000p mark for the second session in a row and closed above this level for the very first time on Monday's trading session. As per crude oil itself, if the United States oil companies jump in to pump more oil in Venezuela, well, the medium-term outlook for oil prices would be impacted negatively. So expect any rally in oil prices to be limited on Venezuelan news. Other than Venezuela, well, investors also kept an eye on the economic data yesterday, which showed that the US manufacturing activity shrank for the 10th straight month in December, while the rapid fall in inventories warn investors that companies are actually relying on the existing stockpiles to satisfy softening demand, which brings the question of what will happen to inflation when they replenish their inventories at tariff-boosted prices. For now, investors remain quite comfortable that inflation in the US will remain in check. This is what the falling US 2-year yield tells us, but there is no guarantee that we won't see a sharp reversal in those expectations. But for now, the US dollar reversed early Asian gains on Monday and is under a decent selling pressure again this morning in Asia. And the euro dollar is better bid after rebounding from its 100-day moving average yesterday. The next key resistance here for the euro dollar stands at the 118 psychological mark that was tested but not broken, not clear around Christmas times. Here, investors will watch the European inflation and PMI numbers today to shape their European Central Bank bets. Remember, the European Central Bank is not expected to change its interest rates this year. They think that policy rates today are at quite a good place to manage the two-sided inflation and growth risk in such an uncertain geopolitical setup. Enough of geopolitics. Now let's finish this episode on a brighter note. Technology investors kicked off the new year with sufficiently strong appetite. The Korean Kospi Index, for example, which is very heavy in these technology stocks, already broke 3 records since the year started, while the Chinese Hang Seng Index, which is also very much heavy in technology stocks from China, is closing the gap with last October's peak levels. In Europe, ASML gained nearly 15% in the first 2 trading sessions of the new year on strong AI demand. And at his speech yesterday at the CES event, Nvidia's CEO Jensen Huang said 2 important things. One, he said that the new Rubin chip, Nvidia's new chip that's 3.5 times better than the Blackwell chip at training, 5 times better at running software, and cheaper to run because it uses smaller number of components, are ready to be shipped to clients, and that big clients, including Microsoft, could already use them in the second half of this year. Oh, and he also said that demand is really high. And second, he unveiled a vehicle platform called Alpamayo to improve the self-driving car's reasoning capabilities in a push to extend its technology to physical AI cars and robotics. So Nvidia was testing the 50-day moving average to the downside before Nvidia's Jensen Huang's speech. Let's see if the latest news, so the push to physical AI, could bring investors back despite question marks regarding high AI valuations, circularity of the AI deals, and also leverage investments. So this is all for today. I'm İpek Özkardeşkaya, and thank you for joining me, and thank you for all your beautiful and supportive comments. I hope this episode of Market Talk has been helpful and it has been insightful to you. So please do not hesitate to leave your comments, your reactions, and your questions below as usual. Follow us on Instagram, on X, on LinkedIn, but also on WhatsApp, Threads, Telegram, and Blue Sky for regular market updates. Subscribe to our YouTube channel for daily market comments, and please don't forget to hit the like button on these videos to let us know that you enjoy them, if you enjoy them, of course. So I will meet you again tomorrow, and until then, good day trading.
Trading and investing carry risks, including capital loss. CFDs in digital assets are volatile and not suitable for everyone. Swissquote assumes no responsibility for accuracy or losses from its use. Products and services are offered only where legally permitted.